Hey, Mike Swanson here. I want to talk to you about something funny I just read about the financial markets. There's a company called Force Shares that's planning on coming out with quadruple ETFs. Now, exchange-traded funds have taken over the investing and stock market trading world over the past couple of years. There's no denying that fact. If you were to go today and take a look at the top traded stocks and ETFs and instruments on the New York Stock Exchange and the other exchanges, you'll find that double and triple ETFs are among the top 10. You'll see a couple of them right there. So there is a virtual mania in trading these things, and this company's trying to take advantage of that. Now, I think there's big problems in these ETFs. Let me show you why. Okay, what you're looking at is JNUG. JNUG is the 3 times ETF designed to move at 3 times the rate that the junior gold stock ETF GDXJ does. Now notice that JNUG went through its lows of last December recently and is having looks like a fairly weak bounce. It's still substantially off its most recent highs of the other month. So it ain't doing that great, and it's of course fallen drastically from where it was last summer. Now, take a look at this. This is GDX. This is the main gold stock ETF, and for disclosure purposes, you need to know that I do own a position in it. Now, GDX had a little bit of a pullback recently, but did not go through its lows in December, and it's fairly close to its highs of the other month. It looks like it's in a position to pause here, potentially consolidate and break out. And I think it can do that. Let me show you why. What you're looking at here is a stock chart I've created. It's a ratio of GDX divided by the price of gold. What this in effect is doing is showing us whether gold stocks are outperforming gold or underperforming gold. When this is trending down, it means gold stocks are lagging gold. This is important because during bear markets in gold and gold stocks, this ratio goes down, and it does the same thing in consolidation phases and corrections within a bull market, which is what I think we're really in when it comes to gold and gold stocks. What happens is the mining stocks go up more than gold during a real bull run because the people are factoring in higher profits to come for the mining companies. So it's a leading indicator of whether or not a rally is real or not. And we have had bounces and rallies in gold since last summer. A recent attempt up towards 1300, then it pulled back down. And the fact that this ratio is trending down told us that that move up to 1300 wasn't sustainable. But now we're in a situation where this ratio is firming up. You can see the resistance downtrend lines on the chart, and it can break that in just a couple weeks, July at the latest, by simply going sideways. What that would mean is a total shift in the character of gold stocks and gold. The ratio would begin then to trend up, and that would mean that gold stocks would be outperforming gold. That's exactly what happens when there is a real sustainable bull run in gold and gold stocks that lasts not just a couple weeks, but months, sometimes even years. We're talking about a rally in gold then that wouldn't just go up to $1,300 an ounce and then fail, but a rally that would go up to $1,300 an ounce, break it, and probably attack $1,400, $1,500. I can't predict when it would end, but it would be a sight to behold. It would mean big gains from here in the gold stocks. But it's a situation that is likely to take a couple more weeks now to fully develop to lead to such a breakout. But it's something I've got my eye on. It's the #1 thing I got my eye on. And I want you to not miss this, what happens when it does happen. The bottom line is, I don't think JNUG is a good vehicle to use if you want to buy gold or gold stocks or, or bullish on them, not as a buy and hold instrument. Okay, day trade it. I'm sure there's lots of robot traders using it too, but this is a warning sign too for the notion of a quadruple ETF for the S&P 500 by this Force Shares company. And in fact, the story I was reading about was saying there's actually controversy at the Securities Exchange Commission on whether to allow this thing to begin trading. It's not trading yet. They're just put the filing documents with the SEC, and that's what the story's about. Is it going to come out or not? Odds are it probably will. There is more money to be made by the exchanges with more activity in another ETF, but a lot of people will lose money in this if they try to buy and hold it. But that's enough for triple ETFs today. I'm thinking of doing more videos like this. I did one last week. People seem to like it. They hit the like button. As long as people like the videos, I keep doing the videos. So hit the like button. Let me know that you like the video. It's right on the YouTube page for the video. Just hit like. And I did a video in March about just simple exchange traded funds like SPY and GDX and XLF, ones that are commonly owned, and pointed out in this video some flaws even in them. Not flaws that you see in these other ETFs, the triple ETFs, but there are hidden costs that people don't think about. And so in my main trading account, my biggest account, what I've done in there is I haven't bought GDX. Instead, I've bought some of the stocks in it instead, the individual stocks themselves. By doing that, I'm going to get higher dividends down the road, and I won't have to pay the ETF management fees. Now, if you're day trading, that doesn't matter to you. But if you're investing, owning individual stocks, if you got a sizable amount of money, I think makes more sense. And if you're someone that is tempted to play JNUG because you see the big moves it can make, individual stocks can make big moves too, especially in the mining world where you got junior mining stocks that go up like crazy. So there's really no reason to mess with JNUG. Don't do it. Just don't mess with these triple ETFs. They're toxic, and if this quadruple ETF comes out, don't buy it. And another thing you should do as we wrap up is subscribe to my YouTube channel. If you subscribe to the YouTube channel, you'll get the next video sent to you instantly. As soon as it's sent out, you'll get notified by Google and YouTube. And I'm planning on doing an interview with Ike Iosif by the end of the week to get his views on what's happening in the financial markets and with gold, and I'll post it up on YouTube. So subscribe and you'll get a notification instantly as soon as it comes out, and I'll be talking with you later.